Hello and welcome to Samvat 2072. Last year has been a one that you could actually forget when it comes to commodities and currencies as well. There was so much happening in the global markets, and that is where perhaps the Indian markets were taking cues as well. But this Diwali, we bring you on what really happened in the previous year, and we get you global voices as well as the domestic voices who tell you on what the outlook can be for the new Samvat when it comes to commodities there. Well, just take a look on how the commodities performed really in the previous one. And you had the concerns coming in from China, devaluation and the economic slowdown in most of the globe. That is what took the commodity prices on the lower side. Everything from energy to base metals to precious metal has seen a bit of a decline coming in. If you look at the Bloomberg index itself, that is headed for a fifth annual decline. The commodity prices are at a 16-year lows, and everything from S&P to Bloomberg to Reuters CRB is down by around 25 to 27% in the previous Samvat. Well, you have seen concerns from the international markets. Apart from that, it really has been a lot of noise that you have seen coming in from US Fed, talking about a perhaps interest rate hike, which markets are still working with in sense of December 15-16 meeting. And ahead of that, there is a lot of choppiness as we enter into a new Samvat there. US may increase the rates for first time in a decade, and the markets also are looking for at a divergent central bank policies into the market. There is a Fed future saying that it is a 70% possibility that you might see a Fed rate hike coming in, and that isn't very positive or encouraging for the commodity markets. There are difficult months ahead for commodities is the view coming in from many of the banks and brokerages. The energy prices have declined quite sharply. If you look at the markets there, it's a 40% decline for the crude oil prices and around 45% of a downturn coming in for natural gas as well. The precious metal space in the meanwhile is down 8 to 12% between gold and silver. The base metal prices have declined quite sharply as well. If you look at the aluminum prices, those are down about 35%. Nickel clearly has been an underperformer with 40% of a decline coming in. Iron ore prices fell by 35%, trading at a 6-year lows. That pretty much sums up how the base metal space has been. On your screens, that's how the previous Samvat really has performed. But let's get on our guests and get their views on how they sum up the previous Samvat and what are they looking forward onto the new one. Joining us first of all is Jim Rogers, author, Street Smarts, Adventures on the Road and in the Markets. We would also have on the show Douglas B. Groh. He's from Tocqueville Asset Management. We're also joined by PK Singhal. He's joint MD NCDEX, and Samir Shah, MD and CEO of NCDEX, also is on the show with us. But Jim, let's start with you first, and it really has been quite a bit of a previous year that we have seen. What is your sense? I mean, the US Fed has made a lot of noise in this year, but less action. But do you see a rate hike by the end of calendar year?
Well, it's always anybody's guess in the markets, Manisha, unless they watch ET, then they can get the answers. I would suspect that this rally is going to last for a while, but probably sometime in 2016 it will come to an end, either because the market will not take it anymore or because some central banks will come to their senses. I wish that all central banks were managed by the Indian central banker.
Jim, also the low commodity prices have impacted the emerging market economies, the exporting countries as well, and there has been a lot of downward pressure because of that.
Well, oil is down for geopolitical reasons. The Americans and the Saudis successfully got it down. But I've noticed, Manisha, that in the last several weeks, there's been a lot of bad news about oil and energy, but prices do not go down. I have learned over the years that when bad news comes about something and it doesn't go down, it usually means a bottom is in process. So it seems to me we're making a complicated bottom in energy, and that bottom will go on in 2015, but probably by 2016 or so, energy and other commodities will rally again. The way I see the world, Manisha, is the U.S. dollar is strong, and the U.S. dollar will continue to be strong because there's a lot of turmoil around the world. The dollar will stay strong. Gold and other commodities will be under pressure, as they often are, not always, but often are when the dollar is strong. Somewhere along the line, the dollar will turn into a bubble or certainly get overvalued. I will have to sell my dollars, and at that point, I don't know what I will do, but I may well put it into gold or oil or other commodities.
Jim, one commodity that has been in news big time really has been the crude oil prices, has impacted all other asset classes and economies as well. The prices are down 50% in past year. Would you say it's made a bottom yet, or would you see still vulnerable to the sides?
Well, as I said, we're in the process of making a bottom. The bad news comes and oil doesn't go down. Others don't either. So we're probably making a bottom. When the market turns around next year or the year after, I suspect we'll certainly go back to 60 and well above. The world's known reserves of oil continue to decline, Manisha. America got Saudi Arabia to dump oil to put pressure on Iran and Russia, and the Saudis were happy to do something about fracking. The frackers cannot make money at these prices. Some are going out of business, whether they know it or not. So supply is going to continue to be a problem in the future after this temporary glut of dumped oil.
Point well taken, Jim. Douglas, getting you in the conversation also, how do you look at the gold prices going forward from here? Because this is one sector that would get most impacted whether or not Fed decides to move this calendar year.
Well, clearly we've gone through a significant correction over the last couple of years, and it appears that as we went through July and into August, we bottomed out. Certainly with the Chinese equity markets popping and their correction, gold prices did correct. But then shortly thereafter, I think, generally speaking, equity investors are looking for alternative to equity markets, and we're seeing a better performance in gold as we got into September and then into October, and the market recognized that the U.S. Federal Reserve Bank was not going to be raising rates and unlikely to raise rates later this year. So we think the outlook for gold is now much more constructive. I think there was a little concern in the last week that with the posturing by the U.S. Federal Reserve that perhaps they would be raising rates by December. But we think should they do that, that would be the one and only time they'd raise rates. We don't see that happening next year. And after that increases in the marketplace, and it's probably already priced in, gold should do very well.
Douglas, so what will really impact the gold prices then? Because the physical buying in India has been slightly on the weaker side, even as we've seen new instruments coming in from government in sense of gold monetization scheme. It really hasn't seen much of a pickup coming in. So what would really take prices ahead?
Clearly, the Federal Reserve does not know what they want to do. They indicated earlier in the year that they would be raising rates. They postponed that. They were frightened by the global marketplace. They were frightened by emerging markets. They were frightened by the correction in China this past year. They deferred that rate increase in September to possibly October. Clearly, now we're in December. They've deferred it to possibly December. I think the markets are reading that the Federal Reserve does not know what it wants to do or does not know what to do. So the Federal Reserve is living moment to moment at this point. I mean, clearly that was their statement last week. As a result, investors can't make plans and get a solid direction on where the future environment is leading. And so that creates uncertainty. So investors are very short-term minded at this point, and the Federal Reserve is not doing itself any favors by being vague and uncommitted. So, I think that, clearly the prices go up when there's a sense of direction. The prices go down when there's a lack of commitment and there's confusion in the marketplace. And that's certainly what we're seeing. I think that if we get the Federal Reserve to raise rates, that would be a positive for the overall marketplace because then we're done with that issue. I think that would be very positive for gold because raising rates would be very destructive on the global markets for emerging markets. And I think at that point, investors would recognize fully that the Federal Reserve does not have control of the situation and that gold offers a good alternative to the faulty monetary policy that we see being executed. And that's our overall theme, is that gold offers a hedge or an alternative to monetary policy run by central banks that are really doing it on an ad hoc basis, that they're really trying to make the most of a situation that they really are not in control of.
Jim, coming to you, that the commodity impact, of course, has come in from currencies in a big way. And we are looking at the US dollar index, which is trading at the highest level in nearly a decade. And the Fed even hasn't moved yet. So what's your sense? Because if the dollar continues to move up from here, we are looking at dollar-denominated commodities see some more pressure.
Well, interest rates are going to go higher, whether it's the Fed or the market taking them higher. The Fed normally follows the market. I know the press thinks the Fed set these rates, but it really comes from the market. When interest rates go higher, there will be another attraction for the U.S. dollar, which is another reason I'm long the U.S. dollar, another reason the dollar will go higher. Manisha, the first time rates go up from the Fed, some people will get scared, but do not worry. It takes 3 or 4 interest rates hikes from central banks before it really affects the market. So don't panic when the first 1 or 2 interest rate rises come from the Fed. Do start worrying when the 3rd or 4th comes. The dollar will be much higher at that point. That's when I guess I'll have to sell the dollar and buy other things.
And even as the US dollar is strong, Jim, the gold prices are headed for a 3rd yearly decline. Where do you see a support coming in?
Well, I own gold and silver. I'm not buying. I haven't bought for several years, as we've discussed. I've even hedged some of it. If the dollar goes higher, as I suspect, it will put more pressure on gold and silver. And the way I see the market is dollar will go higher for many reasons. Gold and silver commodities will go down or will be under pressure. At some point, I'll have to sell my dollars, and then I'll put my money into something else. Gold and silver, oil, maybe some of those things.
Jim, would you maintain that India still stands tall in Asia? Because even as we've seen other economies decline quite sharply, India relatively has done better, even if it's the currency markets or otherwise the equity markets for that matter.
Well, Mr. Modi is doing a very, very good job of going around the world. He's making a lot of friends. He's very popular in the press everywhere. That looks like it's going to continue. I haven't seen many concrete results from his new administration. It's not so new anymore. You say the Indian economy is standing tall. I'm a little skeptical of all government reports, not just India, everywhere, America, China, everywhere. So, yeah, I know that's what they say on ET. I'm not so sure because most places in the world, many sectors are not very robust at the moment.
Well, Jim, that's a point well made. And Mr. Modi also launched the gold monetization scheme in the previous week. Douglas, what's your sense? I mean, do you think the scheme taking up? Because Turkey clearly has been successful on that. Do you see India going the same way?
Well, uncertainty is always an aspect of the marketplace. I don't really know how to answer that question. Uncertainty causes volatility. Volatility causes a wide range of pricing in the marketplace. The market is always uncertain about the future. So we can only be sure that there will be uncertainty going forward. I don't know if that's exactly the question you're asking, but it has affected gold prices as investors look for certainty. They don't always find certainty, and so they'll bet on the certainty or lack of certainty in the marketplace. So you see that in volatility.
Volatility, global uncertainties are expected to continue as we get into the new Samvat as well as the view coming in from our global experts. But on that note, gentlemen, we'll take a short break. When we come back, we'll of course talk about other commodities, agriculture space, and of course get in the Indian exchanges views as well. Welcome to Hot Commodities Diwali special, and as we enter into 2072, the new Samvat, one thing that you need to take along is an important one for commodities was the FMC and SEBI merger. The regulatory merger that we saw in the previous Samvat has been the biggest thing by far that the commodity markets really had to look at. Mr. P.K. Singhal, Joint MD, MCX, now joins us on the show. Mr. Singhal, hi, happy Diwali. And the regulatory merger that took place was perhaps the most positive that the commodity markets witnessed in the past year.
First, I will like to wish all your viewers as well as ET Now and ET Group happy Diwali and a very prosperous new year for them as well as for their families. Last 1 year is basically was full of challenges because of the various reasons. One was that after the budget it was very much apparent that SEBI is going to be our regulator, and FMC SEBI merger will going to take place within 6 months probably. This is what our estimate was there, which appeared correct also. And then because of that we were making lot of technology changes and improvements which we are required to do as a stock exchange, just like DR site, near online site, and then increase in the server, and there are lot of other technological requirements which we need to fulfill as a stock exchange. So we were trying to have those things completed, gives a order, select a vendors, and all those things were there. Similarly on the membership front, since earlier FMC was the regulator, and there was lot of inspections which were done by FMC during last few years. So those inspections basically, since as you know, FMC was not having any power to take any penal action, so those were lying pending in FMC. So though all those inspections we received after the announcement of merger from FMC, so we had to clear those pending inspection. There was about 1,000 files or inspection reports.
Well, absolutely, yes. Mr. Singhal, that really was the biggest thing that really happened. FMC did not have many powers, and SEBI coming out as the regulator for commodity markets really has been very positive. Samir, coming to you, and how would you look at the year gone by when it comes to commodity markets in India?
Well, I think the last Samvat has been extremely, how should I call it, game-changing, path-breaking. The big ticket item obviously is the merger of the two regulators, and I think we need to spend a minute or so just talking about how big that could be for the Indian commodity markets, and not just for the Indian commodity markets, but I guess for the economy as well. India is a very large commodity country. 300 million people are associated with we've got 300 million farmers. More than 60% of Indians are workforce that's employed in the agri sector. If you then add the other commodities, we will have a substantial population that is involved in the commodity sector. In many ways, India is also either the largest producer or consumer of commodities, one way or the other, across commodities. So having a vibrant, thriving commodities market is extremely fundamentally important to the Indian economy for price stability, for food security, and various issues, various strategic issues like that. So the merger of the two regulators will be game changing in the sense that it will bring about a tier 1 world class regulator to supervise the commodity markets and provide the confidence and the risk management that is necessary to take the commodity markets from where it is today to the next level and truly establish India on the global commodities roadmap. So I think that is the main highlight of the last Samvat.
Well, absolutely. We keep our fingers crossed and hope for the best on that. Mr. Singhal, what are the opportunities and challenges that you see coming ahead for the commodities in the new Samvat?
In a year to come, we are basically very much confident that the SEBI will allow, after I think in the new financial year, that is 16-17, we presume and we assume that SEBI will allow introduction of options, not probably in all the commodities, but initially at least in the commodities which are having an international linkage, because then in those commodities there is no issue of manipulation or cornering and all those things. Similarly, SEBI may allow launch a few indexes, so probably the market is going to open. Similarly, initially banks may be allowed to trade or take a position, and banks have lot of exposure to the agri commodities as well as base metal and non-agri commodities, so their participation will also improve. Similarly, in case of mutual fund, I think mutual fund may be allowed to hedge their risk in the commodity future exchanges. And similarly, I think SEBI may also be open to introduction of trading of ETF in commodity exchanges, especially those ETF which are relating to commodities. So
Right.
these type of things we feel that we are going to be open. Similarly, we feel
Well, absolutely.
that probably
You know,
there
Mr.
is-
Singhal, there are so many products that can come into the Indian markets, and as well, as soon as SEBI really settles, we perhaps will look at more entities participating into commodities and more products that the exchanges, as they have mentioned, are in their pipelines in any case. Well, let's talk about the Indian markets overall yet again. And Jim, if you had to suggest to PM Modi on how the economic condition in the Indian markets can improve, what would that be?
Oh, if I was with Mr. Modi, I would say, listen, open your currency, open your markets. This is 2015. This is not 1915. Make your currency convertible. Make it legal for everybody, foreigners and domestic people, to buy and sell stocks, commodities, bonds, currencies, and everything else. Have an open and free economy. You talk about it. You claim you did it before. You claim you know what needs to be done. Well, let's do it. This is not 1915. Let's do it.
Well, let's do it, and there's so much to do in any case. Jim, what's your sense on the rupee really? Because that has been volatile, 5% down in this Samvat. What's your sense on that?
Well, I'm not investing in India at the moment. If and when I see Mr. Modi actually doing something instead of having good press around the world, chances are I would invest in India again. But at the moment, I have no investments in India. Talk is cheap, but let's see some action.
Jim, one more area that really made waves this time around was the agriculture commodities. There have been weather concerns in most producing countries. We saw the Indian chana prices gain up by 70% in previous Samvat and trading at record highs. And that really has been the case with many of them. How would you trade most of these?
Well, I want to buy more agricultural commodities. They're down a whole lot, as you well know. You live there in India, which could be and should be a major agricultural nation. Yes, I had rather be a buyer of agricultural commodities than a seller.
Jim, would you agree that equities really seem to be the flavor or preferred choice right now, because we seem to be looking at the smart money moving in that asset class?
No, no, the tide will probably continue up for equities in most parts of the world because of all this money printing. The Fed may raise interest rates, but Manisha, if it does, it'll be a tiny, tiny amount. If it goes up 0.25%, that's still nothing on a historical basis. It may shock some people for a day or a week or two, but no, that's not going to end the stock market rally. Everybody's still flooding the world with money.
Jim, the metals have been on the weaker side, whether it's the copper, nickel, aluminum kind of metals, or steel or iron ore, everything is at multi-year lows as we end this Samvat.
Well, iron ore is certainly is a little bit of an exception because those guys, the people in that industry, went out and added enormous amounts of capacity in the past several years. So I'm not that optimistic about iron ore for a long time. Other base metals, I'm more optimistic as the stock markets continue to rally, as economies, some parts of the economies continue to do okay. Yes, I had rather buy or sell. I'd rather buy than sell industrial metals. But I'm not doing either right now. I'm mainly watching.
All right, Jim, thank you so much for that. Well, yes, commodities seem to be under pressure. The oversupply is just about might continue as we enter the new Samvat as well. But as we end this show, Jim, would you like to wish Happy Diwali to our viewers?
Happy Diwali. Yes, I love India. It's a wonderful, wonderful place to live. Some of your holidays are the best in the world. Your food, your sights, your languages, your people. Happy Diwali.
Thank you, Jim, for those kind words. The commodities perhaps seem to be bottoming out. Vast markets are, of course, looking at important international cues coming in for the month of December as well. But with that, Jim, Douglas, Mr. Singhal and Samir, thank you so much for being part of the new Diwali show. With that, Happy Diwali to our viewers.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.